Hey everybody, it's Varady-Stannard from Keller Williams Realty. I hope everybody's doing well. I hope everybody's healthy. I'm going to share with you a market update on interest rates, and I have my great friend here, Lynn Whitefall from Supreme Lending. So Lynn, what are the interest rates this week?
They're ranging for a conventional mortgage for primary residence. We're seeing still in the higher twos, mid to high 2% range. So let's say 2.6 to 2.8, right around there. And then if you're looking investment, it's a little bit higher. We're looking 3.3, around 3.3, something. Depends on the interest rates are determined by loan level pricing adjustments, which every loan has its own pricing adjustment. It has to do with risk. So interest rates are determined by risk for each individual buyer. So for example, if someone has a very high credit score and they're putting a lot of money down, let's say more than 20%, well, they're going to have lower risk than someone that may just be building credit or may have had a credit circumstance that they're recovering from and putting down less money. That might produce a little higher of an interest rate. So it's very important to know where the interest rates start and then understand why your interest rate might be a little bit higher than what you're seeing online or so forth, because it could be misleading. It could also be a little disheartening and thinking that, oh, I got a little bit higher, but it's all relative to where you are right now. Bottom line is the interest rates are so low. It is such a great time to be able to finance money and expect them to continue to kind of rise up a little bit this year as we go through states of recovery and economically. But the interest rates are just so low. I mean, borrowing 100,000 right now is only around $400, give or take a few bucks. So it's pretty inexpensive.
I personally think it's amazing, the interest rates. It's unbelievable. But that's
Totally.
why it's so important for people to speak to a lender first so they know what interest rate they get based on money rate, and credit. So that's important.
Yeah.
So when I'm out there and I have a pre-approval letter from you with my buyers,
Yeah.
and I come back and I write up an offer, and there's 8 other people that are also making an offer on a property.
Yeah.
How are you going to help me with that?
So first of all, this, you hear a lot in the market, highest and best offer. Sometimes highest isn't always best. The best offer is someone that has been properly vetted, has gone through the process of being pre-approved, a proper pre-approval. In my opinion, sometimes pre-approval letters can do more damage than they can do good. When somebody's properly pre-approved, they have had their income verified, their assets verified, their credit has been pulled and reviewed. They know for sure that they are qualified and can take action. And how, a lot of the times with certain reputations of lenders out there, a listing agent may get a pre-approval from a lender that may not have the best reputation with the closing on time ratios. Some lenders have lower closing percentages, on time percentages than other lenders. So making sure that you're working with a lender that does have a good close on time ratio or percentage of closing is very important, because when you're making your offer, you want the offer to be the best, not necessarily always the highest, although highest is great too, but it's really important to be the best. Perfect example, yesterday I looked at a few different desktop underwriters and different approvals for someone who had received some offers. And the highest offer was actually the least likely to close because it was pushed to the envelope. So here they are making this very high offer on a property where they may have not appraised, and the buyer did not have any room to put that extra money down. So it was really like a game. Let's just make the highest offer. We'll see if we can get it accepted. Then when the appraisal comes in, we'll negotiate. Well, they had another offer that had a much higher down payment, but only about $5,000 less in price. So they felt it was a better offer because even though it's $5,000 less, it was better because the buyer had some more room, where even if there was a slight appraisal issue, that buyer could still close. So sometimes highest isn't always best, but making sure that we can come in with a strong offer, making sure that the bank is, has properly vetted, that loan office has properly vetted that buyer. They have a clear financial picture, that you can meet the times and the contract. Mm-hmm. That's another thing, making sure if you put an offer in and we say, Lisa, we can get your buyer closed or get an approval, I should say, in 10 days, we'll make that 10-day mark. That's something else. So it gives less exposure out to the seller. They're not waiting 30 days for a loan approval. They only have 10 days to wait versus 30. So that, again, is a better offer because it's less exposure to the selling side. So
absolutely.
I think, in my opinion, making sure the buyer's properly vetted, that you can meet the turn times in the contract, you've got a really solid offer. It's going to give your buyer the best possible chance.
And what's really cool is that you would help me actually close this deal if there's another agent involved.
Mhm.
And I appreciate that because what's going on in the market right now, it's low inventory. There's a lot of buyers out there.
Mhm.
And I just wanted to tell you, I appreciate you and I appreciate what you do. And thank you for this market update. And hopefully we can do this once a week. That would be
I would
awesome.
love to. Thank
All
you for
right.
having me, Lisa.
Thank you, Lynn, so much. I hope everybody has an awesome day. And that's our market update.